after the UK's vote to leave the EU, there has been a demand for the safe haven assets, like currencies like the Japanese yen, the gold. There has been demand for the bonds. We saw the yields of bonds falling because the demand has been increasing. And this is actually indicating that there has been a risk-averse sentiment in the market. Interestingly, there hasn't been so much demand for the CHF compared to the yen and the other currency pairs. We're going to look at this later on. And now the investors are looking at the central bank's future moves. They're trying to make some predictions about what central banks are going to do in the following days. We see that most of the central banks, they have been a little bit quiet. Mario Draghi was talking yesterday, but didn't talk so much on what is ECB going to do. The yen has increased so much, and there are chances that the Bank of Japan will jump in. And today we see stocks are advancing. We see global indices going up. They are recovering. Investors are expecting now that the Federal Reserve will most likely come and cut the rates instead of raising them in 2016. I personally believe that we're not going to see any movement in the Federal Reserve rates unless we have much worse political events. And the market, it seems like it has pricing in now that there is not going to be any Fed rate hike in 2016. We have some geopolitical events like the bombings yesterday in Istanbul. So there are a lot of things happening in the market, and the yen has more reasons to strengthen at the moment. The GBP actually today is very steady. It seems like we have been normalizing to the previous conditions. The volatility has decreased. However, we have comments from major economists that this is going to be short-lived. And let's look what has happened in the last month and in the last week of the GBP relative to other major currency pairs. One chart that I would like to show you is that one. We can see here that the performance of the GBP against its major counterparties, so major currency pairs. So we can see that the minus 15.21 performance was against the Japanese yen. That indicates that the Japanese yen strengthened the most against the GBP relative to other major currency pairs. And the second one here, we can see that it has been the Aussie, the Australian dollar, 10.10%. Then after the Australian dollar, we can see that the CHF come third, which is a bit strange thing because the CHF is considered a safe haven currency. It should have been almost equal to the Japanese yen. However, this is the last month. It doesn't indicate the sole event of the Brexit. It has in it other factors as well because it takes the performance of the last month. We can see also that the US dollar comes fifth in performance with 8%. That's not so indicative of the Brexit event. So I created another chart indicating the last week only. We can see here that the Japanese yen has decreased 11.12% during the last week against the British pound. The Japanese yen increased 11% against the British pound. Second one is the US dollar with 8.74%. Third one is the Australian dollar with 8.31%. And again, the Swiss franc has 7.03% performance against the British pound. Again, it's a safe haven currency, shouldn't be there according to the fundamental explanation that the Swiss franc is a safe haven currency. So it creates suspicions about Swiss National Bank intervening in the market. And
they actually
with that said,
by the way, yesterday.
Okay.
The SMB confirmed that they have intervened the market right after the Brexit vote results, and but there are also other reports at the moment that well, they are afraid to intervening the markets furthermore because they They don't want to risk their own economy, since there are some fears that some of their assets that they have invested in has a high risk value.
And of course, if they intervene more, they will have traders taking advantage of it, and it will be more difficult for Swiss National Bank to hold the Swiss franc, right?
Exactly. Just to give you an example, what they have done, one of the strangest things for me, they, while the Apple stocks have been falling in the last, I don't know, 2 years, they have been increasing their Apple stock portfolio by double what it was a year ago. So they, instead of selling their Apple stocks, which, you know, for anyone with a brain, it doesn't really make sense to keep on investing more on a falling knife, you know. But they keep on adding on these falling instruments. They, just before the GBP collapsed, they sold Swiss franc to buy British pound, which have also, you know, we saw how much, like 12-13% decrease on British pound within a day. So that being said, you know, they are going to be going into a bigger trouble. And as we were discussing, Adamas, with you just before the session, I'm actually expecting to see another major black swan event, latest by, let's say, by the end of this year. It is going to be happening for sure. It's like that movie, you know, what's called, I think it's called The Big Short. We are in a very similar environment as in 2008 financial crisis. Just, it seems and it feels. I was just sharing my personal views with some of the analysts yesterday. It feels like we are in 2007. I have this funny feeling, and I have all my numbers matching up 2007 figures that I was in. But this time it's not about housing. It is more about exchange rates. It is more about interest rates than the rest. But you know, for housing, there was at least tangible goods. For interest rates, they are all you know, imaginary tools. I'm just wondering what are the you know, possible plan Bs from different central banks right now. And the only thing that I am considering right now, or I believe, that will survive this trouble, there are two instruments for me. One is gold, and the second one is the Japanese yen. The rest I have no faith in at all.
Yes, exactly. And you know, it's more about game theory now. Each central bank is looking at the other one to see what is going to be the move, and it's a time of a quiet period before the storm, because okay, we had the big volatility the previous week, and now we're entering into a new week. Everybody has been doing one question on Friday morning: what's happening now? And I think that nobody has a clear view of what is going to happen as well. It's okay. The banks and the governments, they're trying to add liquidity in the market because there is huge lack of liquidity. Even on Friday, there was huge lack of liquidity. One thing that could happen is that we might see some banks going down, like it happened in 2008.
Which is already happening in Italy?
Yeah, in Italy we had some reports that they're trying to add liquidity in banks. I didn't read more about what happened in Italy, but it's again coming from northern countries of European Union, and most likely the problem will come from European Union this time, not from US side. We remain to see what is going to happen in UK as well. I think now they're trying to do the referendum again, but imagine if we have a second referendum and they vote for Brexit again. This is going to be total disaster. So it's a very high risk to take the decision to do a second referendum. and at the same time, Scotland wants to leave UK. I don't think so that is going to happen. But there is a lot of things happening around, and from somewhere, if something comes out, is going to be, as you said, same or worse situation than 2008.
And it seems like it's going to be worse than that. By the way, the biggest bank in Europe is Deutsche Bank, right? Mm-hmm. At least from my perspective. And there are rumors right now that the Deutsche Bank is at the edge of bankruptcy. And I can't vouch for it, but it's gonna be happening. It's just there, you know. When Deutsche Bank, Germany is the engine of the European Union right now, and if the biggest bank of Germany is Deutsche Bank or Commerzbank being hit and becoming at the edge of bankruptcy or anywhere close to it, that's going to be triggering like what happened during the 2008 crisis. It just started by Lehman Brothers, and then it spread all over the world. And one thing that no one is talking right now is that, like in 2008, it was saying that the collaterals for the mortgages would never be impacted. Now they are, or they said that it would never happen, just because it never happened in history before.
Yeah.
Now and their history was how much, like 40-something years that they were doing the mortgage collaterals. Not the same. They have been saying the same exact thing for the European Union, that it will never crash, it will never happen. But again, you know, just because it has never happened before, it doesn't mean that it will never happen in the future. And the banks keep on doing the same old mistake. What is it? Like, I'll give you an example. In 2008, why I'm really comparing it 2007, 2008. In 2008, 2007, the banks started to bet more and more on the stability of the mortgages, and they exposed themselves further to these issues, right? And it ended up putting them with a big balance book that was basically literally worth nothing at the end. Now the central banks are doing it, but what they do is that they keep on printing money, and you know, money printing is just doing the same thing as buying worthless papers of mortgages, which if they cannot be paid back, they were worth nothing, right? And printing money is literally nothing. You can just print as much as you can. At the end, it's just thin air paper, like what has happened in Somalia, what has happened in the old Germany that we had with the Deutsche Mark. That inflation is going to be hitting, and one place that you can really feel the inflation is not in the Western Europe. Western Europe is already expensive enough for many of the people who are living there. Like, you know, like the Netherlands, if you go to Denmark, etc., you will not see much of inflation in these countries. Although, if you compare it to 5, 6, 7 years before, I can see that everything has gone at least by 40 to 60% more expensive. However, you know, I quite often travel to Eastern Europe, like Lithuania, Latvia. I go to Poland, etc. If you go to these countries, every single time that I go there, no matter if the difference is between a month or 2 weeks, I see prices being changed. And those are the places that Europe needs to start worrying about, because salaries are low, and the more inflation goes up, the more worried people will become, or the more unsatisfied will people become. And what happens is that just like in UK, although I don't really like the UKIP party leader. But he said one thing, the Brexit vote was done by the little people, by the small people who were considered to be irrelevant. And the same could be happening all over the world or all over the Europe by the little people again if they start becoming unhappy, which we can already see that happening. And the worst part is that it is likely to push Europe from a melting pot of racist nationalities to more and more racist structured environment, which I hope that it will not happen. Now let's go talk more about forex. Talking of the Swiss franc that Adamos, you were commenting earlier, if you could open maybe a Euro Swiss franc, if we look in the market, we can see that the SNB has created an unofficial peg between Euro to Swiss franc, and that unofficial peg is 1.0750 right now. And 1.0750, looking into it, is going to be the most important level for everyone to look into. Each time it touches the 1.0750 level, the SMB pushes it upwards. You can see how relevant this level has been so far in the history. So they aim to keep the Euro Swiss franc between 1.10 to 1.0750, and this peg is not going to be lasting long. Although they are not really making it out loud that we have this peg, we will be seeing this level being abused, as Adamos you said earlier, that when traders start to notice that the SMB is actually literally putting a peg there, which some of the people have already noticed, like myself. Each time the Euro Swiss franc touches to 1.10 level, I'm selling it. Each time it goes to 1.0750, I'm buying it. I don't really care what happens. It will not be going crazy like what I was doing also during the course of 2008, 2009 up until 2013, was also long in the Euro Swiss franc, just because the SMB had commented they would obey to 1.20 level, and we had the positive swap rates as well back then. So I was just abusing myself the market for the fact that it was a risk-free, literally, trade opportunity. Now, who suffered then was the SMB itself, because they created an environment for traders and for hedge funds, for investors to take advantage of these stupid political and economic nonsense decision that they had. And now we are likely to see the same, but this time the consequences is likely to be worse than the black swan of January the 15th, 2015. And it is likely that we will see the breakout of 1.0750 level more stronger than ever before. And this time I'm 100% confident that we will see either a parity on Euro Swiss franc or even 09 level, which is extremely likely. So at the moment, I'm convinced that 1.10 is the best level to sell Euro Swiss franc, and if that level is triggered by any chance, any possibility out there, traders should not miss that opportunity. And parity is literally like 1,000 pips profit opportunity right there. Now I'm going to pass the floor back to you, Adamos.
Yes. So shall I start talking about some other forex pairs, Euro USD and?
Sure. Let's look into them as well. Let's see what we can take out of them.
Okay, great. So let's start with the Euro USD on the weekly time frame. So we can see that over the weekly, The Euro USD actually it remains in a range formation as well between 1.1620 and 1.0525 as the lowest one, and the first support is at 1.0825. So this is the last weekly candle that happened the previous week. We see that it spiked down to 1.0913. And then if we go to the Euro USD on the daily time frame, we can still see the range formation here. Let's zoom in a little bit more so we can see the latest movements. There is a bearish formation here. Let me circle. This is a bearish formation. Prices went down to more than 3-month low at 1.0909. We can also see that the prices went down to 161, 161.8% Fibonacci extension after breaching the support at 1.01098, and then prices in the last three daily trading sessions have been recovering up to 1.1098, with the 1.1098 is a resistance level at the moment. That's interesting because it has been a strong support and now it works as a resistance level. Most likely prices will find a strong resistance as well, and they will find difficulty to overpass the 1.1098. So we may have a bearish revival in the intraday trading session. Again, if we look into the oscillators, we can see a bullish divergence both in stochastic and in MACD. That has been indicating that the recovery will have happened, and it has happened. So let's go into the intraday time frame. The prices have went down to 1.0912 as we saw earlier, and then they have been narrowing the trade. We see a triangle formation happening with the prices breaching now on the upside, so the recovery may be extended. However, we have to keep in mind that the 1.11 is a strong level, and this one could be a fake breakout. There is bearish expectations in the markets. However, the recent recovery of stocks and the recent improvement of the risk sentiment is supporting the Euro USD. However, this is going to be short-lived according to my expectation. The Brexit actually political events didn't finish. There are a lot of discussion between EU and UK, and the EU has been pushing for a quick exit of the UK in order to keep the European Union united and strong. They want to show to other member countries that it's going to be a cost if you want to exit the European Union or the Eurozone. However, they cannot do much but just adding political pressure to the UK. They cannot take any decision. UK has to go and trigger the Article 50 of exiting the EU. Until then, they cannot do anything. So if that is not going to happen in the following 1 or 2 months, then we don't have any actual event happening. And
Adamus, let me just ask one question and comment on one thing. Based on a game theory that we could apply on Euro, I have been really considering this thing. There is a big likelihood that Euro USD could bounce up actually, if we look from a different perspective. And this game theory would be from a Brexit perspective. UK would be triggering the Article 50. They would be aiming to go for full Brexit. The EU from the back end would trigger the media, which they have already triggered anyway, to create an environment that there is no risk at all in the EU, and the EU is doing better without the UK than with UK. Then they would also be triggering the Scotland and Ireland to ask for another referendum to stay as a part of the EU. So they would leave the UK, which would mean that weaker Great Britain weaker pound. So that being said, it would push in such a risk sentiment that the EU is better off without the Britain or the UK than with them. And even yesterday, one additional thing was mentioned, which was saying that London is most interested in part of the EU than the rest of the UK itself. So that's another point as well, that there could be possibly an agreement that certain trade deals could be made only with London in order to keep the liquidity, etc., ongoing. And again, all of these would push the pound to depreciate, while they are all aiming to keep the euro stronger. And if that is the case, we could actually see on a medium to short-term period a bounce from the euro dollar.
And in order to keep the other side of opinion, because we have talked and we said that, okay, EU is weakening, but of course, eventually this Brexit could be proven a good thing for European Union. There is this case as well, because if they manage successfully this crisis, they could become a stronger European Union. They will stop enlargement of the European Union, and they will look into integration. So it could be proven a better thing for the European Union.
I think you just answered one key point right there. Europe has been making a giant mistake by looking for a non-stop expansion, even during their times of crisis, instead of looking for internal policies that would look into, local integration, local economic development, and outside deals, trade deals that we could have. And if they, as you said, manage to pull this crisis out properly, and then turn the attention from Brexit or Grexit to internal integration, and avoid further expansion. Like, although I would love to see, as an example, Ukraine becoming a part of the EU, but Ukraine is in crisis itself. If they start pushing them as well as a part of the EU, we will see further issues as well there. So if these things are going to be planned and executed properly, rather than just like a game that they do so far, as an example with Russia, we could see a further development in the EU and revolving to a superpower.
Yes, and we have to look on that scenario as well, the scenario that they will manage successfully this crisis. And European Union, the main reason that UK is exiting, and the Brexit campaign their campaign reasons were refugees, taxes, financial crisis, and also that they want to keep the control of the decision for their own country. European Union officials know that, and they will try to solve these issues now. They will try to solve the refugees issue. They will try to solve the financial crisis issue. And if they manage to resolve it successfully, they will, the Europe could improve, the European Union could improve, and eventually that will be reflected on the euro. So it remains to see how it's going to develop in the following days.
But I have a up there, because Nigel was commenting yesterday, which made me laugh very much. That none of these guys literally have any proper business background. They just are bookworms, How can I actually expect my future or my children's future to be resolved by some theory people rather than actively,
but at the same time, Nigel has based his campaign on this 350 million money that they give to European Union. They could give it in NHS, and then he came out and he said, but I didn't say that. So I personally don't believe him so much on what he said.
I'm actually suspecting that they will end up paying more to Europe
Yes.
with their Brexit. But anyway, that guy is a little bit of a crazy person for my my outside view. But every crazy people, so far, all the revolutions have been achieved by the crazy people in the world, right?
Exactly. Exactly.
We can't just ignore them. So let's see what's going to be happening.
Okay, so let's go back to the Euro USD. In my opinion, 1.11 is a very strong level, and I wouldn't expect prices to successfully breach today this level. However, I'm going to watch it, and any close above that on the hourly or on the H4 will confirm that there is a strong resistance breakout of the 1.11. And the next currency pair that I'm going to look at it is the GBP yen, the GBP versus the Japanese yen. We can see that the GBP yen has been on a downtrend and actually have fell from 195.34. I think it was in August 1 year ago, went down from 195 to the current level at 133.38. This is a huge drop, and actually in December 2015 it has completed the formation that I mainly look at in order to define the trend, and this is called failure swing by some. This is a very nice level to look at in order to say some about trading formations. So this kind of trading pattern indicates that the prices failed to go to previous high and have reversed. So I wish I could have followed this trend from here at 180. However, I didn't. And anyhow, this is a very nice downtrend. However, the level came down to 133.38. And if we look at the current oscillators at the moment, if we put MACD and stochastic, we may see that the current indications is that market is oversold, and we can see the stochastic is below the 20 line. MACD is at previous bottoms level, suggesting that this is oversold market. If we go to the daily time frame, we still can see that the market is downtrending. Prices went down to 133.36. There is a bearish structure, and we can see that recently the trading is narrowing. We can see that the narrowing of the trading activity over the intraday time frame. We can see that prices volatility have decreased compared to the previous week trading, and prices are now forming a descending triangle formation. So this is a bearish formation, and we would expect, according to these prices, to keep a bearish bias. The Japanese yen, as we said before, has many reasons to be strengthening because of geopolitical risk due to recent bombings in Istanbul, as we said before. We'll have non-farm payrolls the next week, which is going to increase uncertainty until they release. On Friday, we'll have the Japan's Consumer Price Index. However, we're very cautious because Bank of Japan may intervene in the market. The Japanese yen is very strong at the moment against all currency pairs, and we need to be cautious about this. Jakub, this is what I have to say. For today.
Talking of the Japanese yen, also, the Japanese finance minister has also commented last week that they would not actually intervene in the market. That's why we have seen a massive increase on the GBP Japanese yen or appreciation from the Japanese yen itself. And what they have commented was that they would do everything in line with the G7, G20 agreement. There is a controversial, commentary out there that in 2009, 2010, G7 and G20 together, they intervened the financial markets. Although the countries declined that they have done so, most of the analysts believe that they have intervened it. So this comment that came from the Japanese finance minister last week, we have a video on A2C Forex somewhere about it. We are likely to see that, if that is the case, possibly pound Japanese yen is going to be depreciating furthermore. But I'm suspecting that this depreciation is likely to start taking place once the pair hits the 1.40 level. And that's the level where we can see on Adam's screen right now that it is close to the Friday market closing, just a little bit above the Friday market closing of.
Yes.
And the reason why I'm going to that level, Adamos, is mostly because of the fact that 1.40 is also a psychological level. It's not just a gap there. I'm not a gap trader, and I don't believe in those things working well. And if you go backwards on history or in history, you would see that this level was a major support level back in 2013, and it was also a major resistance level in 2011, and this was probably one of the most pivotal levels for pound Japanese yen. You can see it was like a pivot level. So therefore, I'm going to be looking for 140 level as the most important level for shorting. And probably if I'm going to be trading this, I have a pending sell limit order, by the way, there on my personal account with one lot only. But I'm going to be looking
at 140.
Yeah.
Okay.
And I'm going to be looking for actually trading this pair towards 1.30, 31, something like that. That's the level that I'll be looking for. We have some questions. One question comes actually for you. It says, "What does it mean when short-lived when you're commenting?" I think.
Yeah, short-lived, I mean that is going to live for a short period. So this normalization that is happening at the moment in the markets after the Brexit vote, I consider that is going to not to hold for a long time because okay, there is a risk sentiment is improving today. However, the situation doesn't change. We have the Brexit vote, we have the political risk, we have the uncertainty. However, we see some bounce up in stocks. We see a slight bounce up in the British pound, but this is, in my opinion, short-lived. And with that, I mean the bounce in the British pound is not going to hold for a long time, and the bearish bias is going to revive.
Definitely. And let's sum it up for today's session. We discussed many things, but the first thing that we have touched base was the safe haven assets. As we said, all the safe haven assets kept on appreciating except one, which was the Swiss franc, and that was because of the fact that SNB announced yesterday they intervened the market. So the opportunity will lie in there that most likely SNB is going to be giving up with their intervention, and that will lead up further appreciation of the Swiss franc. However, the best opportunity, I'm convinced, is close to 1.10 level on Euro Swiss franc, and the target should remain towards 1.05 or 1.00 parity level. This was the first thing that we discussed. The Japanese yen, we mentioned that overall is going to be acting like a safe haven asset, which have been during the course of 2007-2008 period and up until basically 2013. We will be seeing Japanese yen acting like a massive safe haven asset for the market. We have also discussed that the British pound has appreciated, but it's likely that it's not really depreciated. Sorry, not appreciated. It is not likely that it's going to be the end of this depreciation, and the biggest movement is expected to take place once the European leaders and the British politicians come to some kind of agreement. Up until then, we are looking into so far a sideways market movement or instability that would create spontaneous spikes in the market. But the opportunity that I want to share before we finish up this session is lying on the instability itself. And during the times of instability, there are generally, if we refer back to the latest crisis that we have had, which was 2008 crisis, generally the Japanese yen was the best performer in line with gold. And one thing that if you are especially living somewhere on North America, Canada, or the US, that you can take advantage of gold would be probably involving on purchase of gold mining companies stocks, because each time gold appreciates 1%, these gold mining company stocks would appreciate by at least 2.5–3%. So the ratio, the difference in ratio of gold mining companies and the gold price is around 2.5 times. So you can also take advantage of this. But meanwhile, gold itself is expected to appreciate as well, and you should be looking for 1290 to 1300 level for buy opportunities on gold now, and your target should remain towards higher level of 1500 zone. Meanwhile, a question comes from without us: why silver shot up? Silver itself is also a safe haven asset. All the precious metals are considered to be a safe haven asset. And one thing that you need to know is that the ratio between silver and gold, which I'm going to be writing an article, by the way, on A to Z Forex today, has been broken. And there is likelihood that silver should be appreciating faster and further than the gold itself as well. And we will be looking more into those in the coming days. Probably next week in our analysis with Adamos and myself, we'll be looking into safe haven assets and what to do in times of crisis, since it seems like we are getting close to another crisis again. Adamos, everyone, thank you so much for your time and inputs today. Appreciate it. Do you have anything else to add?
No, Jakub, thank you very much. Thank you very much, everybody.
Thank you so much.